Yeah, so hello everybody. This is the HackerNoon Podcast, and today we would be discussing about flash loans, flash loan attacks, how they happen, what are some of the implications that can lead to certain catastrophic results in the financial world, and how are some of the people who are fighting against flash loan attacks and preventing it wanna go about things. Without further ado, I'd like to introduce Sam Kim, who is the founding partner at Umbrella Network, which is a decentralized oracle. For those of you who don't know, oracles basically are the window through which blockchains communicate with the outside world. We also have Miguel Morales with us, who is the technical advisor to Umbrella Network, and together we'd be going over how did those flash loan attacks happen, whether it be on Ethereum, whether it be on the Binance Smart Chain, as we spoke about, and what is the underlying mechanism, like what makes it possible. We would go deeper into all of that. But first, let's pass on the mic to Sam Kim and let him tell us what has he been doing for the past few months. Hey Sam, welcome to the podcast.
Hey Utsav, thanks for having me over on your podcast. Excited to be here. It's a great and topical topic that we're covering right now, and hugely important given all the things that have been going on in the market with these flash loan attacks. I think this is a real issue that we've got to address and get out in front of because they're going to continue to happen going forward. I think the past couple of months we've been focused primarily on getting our Oracle out to market because we think that a strong, thriving Oracle that covers a broad number of assets is the best way to fight these flash loan attacks. So excited to talk about this today.
Definitely. And we'll be looking forward. Now let's go over to Miguel. So Miguel, does a flash loan attacker look like you, or is he like something very suave as Sam?
Yeah, I don't know. They're probably not as good looking as me. I don't know. But yeah, I'm kidding, obviously. But my name is Miguel Morales. I'm a technical advisor here at Umbrella. And it's kind of, our job. It's pretty exciting to be able to, architect and build products that solve these challenges because, as we're going to discuss, they're largely like an Oracle problem that can be largely solved. So it's just exciting to be here.
So let's start with the question, let's ask Sam first, if you could explain what a flash loan attack is at its essence. How do you explain a flash loan attack to your mom? It's something that I love to ask everybody. How do you explain things to your mom? And if you can do that, you can explain it to the wider world very easily.
Yeah, I mean, I think the way I've been kind of explaining it to kind of in layman real world applications, think about your mortgage, right? If you take out a home loan, the bank, one of the first things they do is appraise the value of your home, right? And based on the amount that you're appraised, the house is appraised at, it determines how much you can borrow from the bank and how much money you can collect, right? And so, if you want to borrow more than you're qualified for, you can if you can figure out a way to manipulate that appraised value, imagine in a world where that's done through software, and if you figure out that algorithm and manipulate it in such that your home, which may be worth $100,000, all of a sudden gets appraised at $1 million, you're going to be able to access far more cash from the bank, right? At the same time, imagine if you have a outstanding loan and somebody manipulates the value of your home to decrease, right, from let's say 100,000 to 25,000. Now there's a potential that your mortgage will get called. And you will have to pay back some of that money that you borrowed. I mean, that's not the case here in the U.S. in general, but in other markets, that is a real possibility. And so that's sort of what people are doing. And that's the end that they're trying to, that's the arbitrage they're trying to enact. The flash loan is the mechanism by which they are manipulating those prices, right? The value of USDT, the value of, USDC or any other crypto asset. They borrow through a flash loan, which I think maybe Miguel can talk to the flash loan a bit. But basically, through a flash loan, they get access to a bunch of capital, and manipulate the price of a crypto asset such as USDT, USDC, or an altcoin in order to then take advantage of that altered value in another marketplace, in a secondary market, from where they manipulate that price. That's sort of, I kind of answered, a little bit more than what is a flash loan there, but the two go hand in hand.
Right.
So.
Exactly. So let's go over to Miguel, and like Miguel, as Sam brought up this thing where he says that the price of the USDT or the price of the USDC can be manipulated. For the layman, what this means is that people just manipulated the price of the US dollar. I guess only the Fed has the rights to do that, or at least the Fed has the power to do that, or maybe the people who with their money printers. How does that translate into the blockchain side of world? Because when it comes to blockchains and cryptocurrencies, people tend to believe that once it's on the ledger, it's live. How are people manipulating the price of something? Break it down for the layman.
Yeah, absolutely. So, I mean, at the end of the day, there's still smart contracts. There's still, you could argue that it's not really a hack per se. I mean, this is the way that the system and smart contracts are supposed to work, in the way that they're, coded. And the way that it works, at least in sort of some of the early attacks, the flash loan attacks, was the attacker, right, initiated a flash loan. And then they went and used that flash loan to do, let's say, a big trade between a crypto pair in Uniswap or Curve or One or whatever. And so, because of that large transaction, the way that these decentralized exchanges work, it moves the price significantly. Particularly if it's a small pool, a small liquidity pool, is going to shift the value significantly. And so, for that point in time, even if the value quickly shifts back, within the next few seconds, within that transaction, the value of the asset would change dramatically. And so within that transaction, then the value changes, the price changes, and then that's where you can sort of manipulate and do other things. But that's essentially how you do it, is you just make a large trade on a pair that has a smaller pool, and then that really changes the price.
Got it. Do you think that there is a role that the Uniswaps or the Sushi Swaps, the Curve Finances of the world can play to prevent that? Or is it just that it is two systems communicating and there needs to be a layer of sorts like the oracles as you guys are building? Or is it gonna be there is a world whereby the communications can be streamlined, maybe a secured pipe that makes sure that the pricing is always right and fair?
Yeah. Go ahead, Sam.
Well, I was going to say is that any single market can be manipulated. I mean, there's not a market out there that's big enough that it's not subject to a potential attack. We saw that with Coinbase Pro, we saw it with all the other exchanges that we're talking about. And if you look at even the larger centralized financial world, if you look at the NASDAQ, when there was, I forget the name of the hedge fund that was liquidating assets rather rapidly. I mean, they single-handedly depressed the price of the NASDAQ equity market, and which is, I mean, if you think about the sheer size of the NASDAQ market, it's, in comparison to crypto,
massive.
It's huge, right? Yeah. So, I mean, any single market is vulnerable, and therefore, to your point, having that additional layer where an oracle comes in and looks across the entire market and judges the price not from a single exchange, but for all of the exchanges, that is the most viable way to protect against these things. Because, how do you protect against how does a flash loan work in such that it manipulates the price across all of those exchanges, right? And so I do believe this layer of oracles that sit on top of these exchanges are critical.
So Miguel, before you guys bring on the umbrella network into mainnet, tell me, how do I take out a flash loan? I want to borrow $1 billion. How do I do that?
I don't know about $1 billion, but you can borrow a lot of money, and it's exciting. I think it's really, really cool. It's one of the things that really make a blockchain different, right, from like traditional financing. And so, for example, the most popular library out there is Aave. And so Aave, for example, has a smart contract library, and you can develop your own flash loan code. So it's an API that they give you. So within your Solidity smart contract, you call and you say, I want this amount of tokens and a few extra parameters, and then that token, that contract, the Aave contract, has some callbacks, and it calls back to your method to make sure that everything happens within one transaction. And so you just have to implement these callbacks in your contract, and then use the Aave SDK to call Aave, and then immediately you can have access to millions of dollars of any token without any collateral, and only paying like a small fee. You can also do it. Another thing you can do it is through DEXs. So Uniswap, I believe, has a way of doing a flash loan. I know PancakeSwap does, and there's a few other ones. So, but Aave, I think, is the most popular one. And so you essentially have a library that you can use to write code that borrows millions of dollars, and you can use it for within that transaction for like 8 seconds. That's exciting. Yeah.
Got it. So 2 questions here. Do I need to be a programmer to take out a flash loan?
I would say that if you want to be successful at it, because you have to like monitor, let's say you're doing arbitrage, you have to like monitor different pairs for this arbitrage opportunity and then act on it. I think if you want to be good, like, yeah, you have to know how to program, and you have to know how to program and make the smart contracts that use the flash loan. Now, I think Aave has a front end, so you can do these things on the front end and like be a dashboard, a graphical interface, but I think that's so much less powerful than code. So to answer your question, you don't have to, but I think to get the most power out of it, you have to be a developer. Yeah.
Got it. So all of those people watching who watch those YouTube videos saying, learn to take out a flash loan in 5 minutes, learn to code first. But coming back to my second question. So how long do I have from taking out a flash loan attack, like taking out a flash loan, before it needs to be paid? Like, how long is my flash? Weird.
I mean, it's hard to describe, but to answer your question, it would be every time a new block is minted, so you have access to those funds. So that's 23 seconds or so. And so you essentially have that long, but from the point of view of a computer, it has to be done immediately. So all the code gets executed sequentially, and it's similar to a database. So if you guys are familiar with like a database, you can do what's called an atomic transaction. And atomic means that everything has to succeed or nothing succeeds. And so if there's a step, something that fails, the whole thing rolls back to the original state. And so you have that amount of time so let's say a line 1, you borrow it. At the end, you have to give it back, and you can enforce this with code. And so you have that amount of time between you borrow it and you give it back to do whatever you need to do. So you can call the smart contract, you can do arbitrage, you can do swap, you can create tokens, you can set tokens at stake, whatever you want to do within those lines of code.
Now let's go back to the entrepreneur. So Sam, what are some of the opportunities that you would like to leverage if you get Miguel to take out a flash loan for you? You have 8 minutes or 8 seconds.
I think we would have to turn off the cameras and mute in order to discuss that. No, first, I think I wanted to kind of emphasize one of Miguel's points earlier that I guess the word hack is not the right word for us to use, right? I mean, hack suggests that somebody, broke into the system, right? I mean, this is all smart contract code. In most cases, they were audited. They were operating the way they were designed. It's more of an exploit, right?
Exploit, yes.
So, I in the earlier days of this flash loans, I was more careful to call it an exploit rather than a hack, but I probably strayed from that, and it's because they've become so commonplace. But yeah, look, there is still more. There are more every day. I think we're seeing kind of nuances of the original flash loan hack. or manipulation. And they were starting to see them in not just Ethereum chains. I mean, obviously Binance. We're starting to see them in Binance Smart Chains applications. We're also starting to see them in liquidity pool attacks, right? Rather than traditional attacking the price of a stable coin, now they're going after kind of the liquidity pool pricing, and then who knows where this goes next. But what I do know is that Umbrella and oracles in general are well positioned to safeguard against these attacks. And one of the things that we should always be looking at is how are projects that you're staking or you're farming with, how are they basically preventing these attacks, right? Where are they getting their price feeds? Are they looking to a single exchange? Are they looking to an oracle that's well diversified? I mean, those are things that we should be looking at. And that's where my attention is, rather than how should I take advantage of these flash loans. So
I know why you say that, right? Because you and I are millennials, right? So we like at least as the sciences say, is that we are more prone to following the word of the law, like being more, how do I say, compliant. But then this newer generation, which YOLOs on the GME stocks or the AME stocks, like they don't have those hangups like we do, right? So they would like possibly, and like I use the word allegedly, like use it in more creative fashions. But do you think that there is a shift in terms of what people think of capital these days? In our times, at least, it used to be capital means whatever you have saved up and then you invest it, then you buy a house, then you invest in some stocks or whatnot. And then you see all of these kids buying futures on Robinhood. Is there a world by which all of these attacks, like flashstone attacks or whatnot, could become more commonplace and become something that everybody accepts as a part of the system? Like, as some would say, if you are smart enough to pull it off, like, why should you be penalized? You did not break any laws.
Yeah, I mean, I think what your comment about the capital and people's thoughts around capital are, how it's different. I was taught to first save money, start with your retirement accounts, get a nice stock and equity portfolio going, and then when you have some money, do some higher risk investing, whether it be single stock portfolio or crypto, right? And even within crypto, you start with Bitcoin and Ethereum. And
yes,
you've got a nice base there. Then you look at altcoins, right? Like that can give you higher returns than the Bitcoin and Ethereum. And then only then do you go for these like really far outliers. But it seems like it has flipped a little bit, where a lot of money is coming in and bypass, and rather than kind of starting with Bitcoin and Ethereum and keeping their assets there, they're like jumping right into these like meme coins and NFTs that have the potential, in their opinion, for outsized returns, right? And I'm not here to talk negatively about meme coins or NFTs, but I'm just saying that that the return profile and the risk return profile of those are quite different, and it seems like that's become more commonplace. And to me, it's a little bit unusual to go there first, but the world is very different than when I was starting off my career,
right?
And so it's almost in some ways understandable,
right?
But having said that, should everybody as a result now be jumping into the flash loan business? No, because we have a social contract with one another, I believe, to look out for each other. And it's not written in a smart contract code, but it is a social contract that we all have with one another. And taking from somebody is not costless, right? It's meaningful for somebody else to have that loss, right? It's when you do these attacks, there are victims, right? There are absolutely victims, and I think
there are.
Being on the internet and being crypto and everything being done on Telegram, sometimes we lose sight of the fact that there's a person on the other end. I think at the same time, as an industry, we have to recognize this problem and we have to take the steps to mitigate them or prevent them. In most cases, we know how to do it, right? And the problem is just that oracles today aren't supporting every single crypto asset that needs to be supported, right? I mean, the top, 50, top 100 crypto assets maybe are getting full support, but beyond that, there's a lack of oracle level support. And so, that's where, Miguel and I are extremely excited because that's where we're focused, right? We're focused on the rest of the crypto assets, while we do support BTC and all the other top 50, top 100, but it's also the middle of the market, right? They deserve to be, their tokens and their assets deserve to be protected just as much as everybody else. And so we're really excited about that. And we've been working really hard, just primarily, in large part to solve that problem.
Got it. So when you talk about Oracle level support for these cryptocurrencies, like people get that for the first 10, 50 or 100, and then like you say that you have it for a much larger number. Like, how do you guys factor in people such as Elon Musk, who today tweeted, if you didn't see, I'm gonna name my Shiba Inu Floki. And people were looking for like, what the hell is a Floki? Is there a Floki coin? Where can I buy that Floki coin? Even the price of Shiba Inu rose, and Dogecoin guys, like they call him their father. So like even that price rose. So while the rest of the cryptocurrency market was falling, Dogecoin rose by 7 to 8%, Shiba Inu by 12%. I did not look into the fact whether Floki exists or not, but I don't know. Like there were people searching for it on Twitter. So how does like Umbrella Network factor into these externalities or like these extraneous factors?
Well, the purpose of an oracle isn't to tell you what the market value of a token or should be, right? It's what it is. What is the value without the external manipulation? So what do I mean by that? Like when Elon Musk makes a tweet that drives up the price of Dogecoin or any other coin, right?
Right.
Those are real market moves. You're seeing that move across all of the exchanges, wherever it's traded, right? With some real liquidity. And therefore, that is the present value, true economic value of that token. As opposed to if the price of a token is manipulated through non-economic means in one exchange, that is an outlier. And so what we're trying to do is protect against those outlier manipulations. And so if 9 out of 10 exchanges show kind of the similar price and there's this one outlier, well, we shouldn't let that one outlier that's trying to manipulate the market alter our view of what the price of that token is, right? And so we'll drop that value and focus on the other 9 that are more in line and more consistent with one another. But it isn't designed to. We didn't design this to Elon Musk proof crypto pricing, right? It would take something far more innovative than that, to prevent that one. So
got it. And that makes a very interesting discussion on what exactly constitutes manipulation. Because when Elon Musk does it, it's in the open system, right? It's not in a closed system. But when these flash loan attacks happen, they happen within closed systems, within very smaller markets or very smaller areas where the price gets manipulated, which is not in consonance with what you would call the price of the larger market. So having said that, let's go back to Miguel. And Miguel, could you walk me through one of these examples of a flash loan attack? Explain maybe the Harvest Finance attack or the Burger Swap attack, so that we could maybe understand what are those sequential transactions that happen. Because from where I'm standing, if I am sending let's say 1 Ethereum to you, the second I hit the send button, I'm praying to God I did not pardon my French, I did not fudge up the the public keys or my own private key or whatnot. I don't know. I'm just praying unless you give me the confirmation that it has been sent, I would not rest easy. So, but when you look at these flash loan attacks, it goes over a series of steps. Walk me through one such attack. Maybe that could help us all understand it better.
Yeah, absolutely. So I'll try to keep it high level. Some of these attacks are pretty complex. So everything, and it's really interesting because they can do all these things within one single transaction. So the Harvest Finance, right? Like one of the classical flash loan attacks.
May I interrupt you once over here? What do you mean when you say within a single transaction? Does it mean within the same block? Or how do you explain that to somebody who doesn't get it?
Yeah, it's essentially within the same block. Yeah, yeah. But even then, you cannot send two transactions to the same block and have them relate to each other. You have to do it all within that one thing, entry in the block. So it's every block and then within an entry in the block. So you have to do it within that window.
Yeah.
Okay. Yeah. So that's essentially a transaction. It has to happen within the block, and it has to happen within an entry in that block. And every entry in a block is called a transaction. Yeah.
Gotcha.
Yeah. So essentially, let's say I initiate I write a smart contract that does all these different steps. Like first it borrows the flash loan, then it does it creates a new liquidity pool, it creates a new token, it adds to that liquidity pool. All of that you code it up first in a smart contract, and then you deploy that smart contract, and then you initiate a transaction on that smart contract. So it's not like your transaction has the code. Is you have already deployed the code, but you have a transaction that initiates the code and executes the code. So, just kind of getting a little bit more in depth there.
Please do. This sounds very interesting. Do you create your own token during a flash loan attack?
You can, and that's what that was the burger swap attack. Wow. So yeah, you can create your own token. You create your own pair. Which is really interesting, and your own pool, and then add to that pool. So you can create, so the burger swap. But let me take a step back into the Harvest one, because that was really simple, really easy to understand. Right. So the Harvest Finance one, essentially, the attacker moved the price of the burger token by initiating a large trade on it was Curve, I believe, Curve or Uniswap. And so they executed a transaction and they moved the price, and Harvest Finance was using the price of the burger token that is being defined in I think it was Curve. Let's say Curve. So they're using that price that's defined in Curve, which is wrong, right? And we've seen some of this drama, we've seen Hayden from Uniswap say why do you need Chainlink, right? Why do you need Chainlink? Well, the problem with using just DEX to get your Oracle data are these problems, right?
Exactly.
So that's why you need we need an Oracle or something, not just a DEX. You need an outside Oracle. So that's the big problem of using DEXs as an Oracle. So essentially, Harvest Finance was using Curve as an Oracle to get the price of the burger token. So when the attacker manipulated the price, then they were able to execute the exploit on the Harvest Finance side, and then withdraw the tokens. Kind of at a high level, that's what happened. Yeah. Now the burger swap one, that one's really complicated. So essentially, all within the same transaction, the user created first they borrowed the money. Then they created a new token, just a fake token, right? Out of thin air, created a new liquidity pool for that token in Burger Swap, and then added all that WBNB into that pool.
Wow.
Right. And so they're doing all this, and then that shifted the price of burger. So they created the liquidity pool, but yeah, they used the burger fake token pair. And then, but they also this was an exploit, like because they exploited some of the coding because they were able to manipulate sort of what the smart contract thought was the total reserve, and so this basically altered the price of the burger token dramatically. And so from there they were just now they moved the price, and now they're able to like swap. So they swapped the fake tokens now for the WBNB from the pool, from their own pool that they created, and then from that they that's crazy. From that they basically then were able to swap the remaining for burger through burger swap. So and then from that they received the WBNB. And then from that, they swapped that the remaining BNB to more burger, and then they finally at the end they repaid the flash loan. So very complicated. Like this is like kind of very, very high level. So all these different 7 or 8 steps that are just described happen all within that one transaction. So if you go to the transaction, you can see like all these different token transfers that are happening, and it's really, really interesting how the tokens are moving. And yeah, that was pretty complicated. Yeah.
Wow, it is complicated even when you try to break it down. Okay, going back to Sam. So let's say that you have all of that money from the splash loan attack, but it's still on the blockchain. It can be traced where it went. Like you could use all of the mixers of the world. You could convert that to Moneros or whatnot, but your money would still be tainted, right? It can be tracked, it can be tagged. Is that the reason why some of these people choose to return the money, which has been reported way more than I would have expected? I heard about a flash loan attack. A few days later, that guy returned that money. I'm like, what were you doing it for, right? I don't know, but what is your take on things? Can it become untraceable in the way that the powers to be in this centralized world think of all cryptocurrencies? It's untraceable money. It will devour our kids. It will finance terrorism or whatnot. Or is it something that can be traced?
Yeah, look, I think people talk about crypto being enabling all sorts of negative bad behavior is so overblown. I mean, as if these things weren't happening before the invention.
Exactly. They want their dollars to be used, right? Because they printed those dollars.
and just like you said, I mean, great. Go ahead, use these traceable tokens. Sure. I mean, that's like an FBI agent's, that's the biggest favor you could do for them.
Yeah.
Right? Just let me create this permanent paper trail of where I took the money and where it's sitting and all the hops in between. Right? That's fantastic. But why do people give it back, right? And while we're seeing some of these negotiated settlements, and I think they're almost in the category of the benevolent hackers, right? We do need to identify these potential exploits. That's why we go through audits, which are very time-consuming, not to mention expensive, but they're worthwhile because we want to have the best code out there possible. And so is there a role for an ethical hacker? I do think there is, right? And how do we facilitate that in a way that's not damning to the project, especially to the people who have their tokens and their assets locked up with that project, right? I mean, nobody wants them to be damaged. And so how do we create a way for that? And I think, as a community, that question is being asked more and more. And I've seen projects who are helping to facilitate, kind of the interaction between ethical hackers and the projects. So I think the ones that return the funds, some of them do it purely because they want to show how smart they are and how about their own skills, and I more power to them. Obviously they have Please do return the monies. Everybody would appreciate that. And then there are two, the ones that find some way to negotiate a settlement where they take the offer of the project to return the funds for a certain amount, right? Like I think those are all fair compromises until we as a community grow and figure out, a longer term solution to this. Because we do have to have our code be battle tested, our design and our architecture. At the same time, we need a way for these to identify these in a way that's not damning or harmful to the broader community.
That is very sound. Let's get a technical perspective on this one from Miguel. So Miguel, about 2 to 3 years ago, when there were mostly centralized exchanges, there used to be a vetting process where you could pay a huge sum of money to get listed, or there was this vetting process where you paid a lot of money and got listed. So in that world, there used to be at least a layer of security as to the exchange listing a token would make sure that the token was backed by the right people or whatnot. They would make them jump through hoops and pay a lot of money. How does that compare with the current scenario where pretty much anybody can be a token on the DEX, as the Burger Swap guys does? Is there a world where we need a balance, which can be said about pretty much anything in the world? Or is it that the financial chaos of the DEXs should be allowed to continue unabated and let let's say order appear out of chaos? I am being poetic. Okay.
Yeah, sounds good. That's an interesting question. I personally got into Ethereum and blockchain, not because I had heard about Bitcoin, but it was really Ethereum, Solidity, unstoppable code that really got to me. So, from a philosophical point of view, I prefer DEXs, right? Anybody can just go and create a pair. Anybody can go and create a pool. The attacker did for Burger Swap and list it, and then and I guess people put in the wrong addresses sometimes, and I'm terrified of that too. I'm always please let me make sure I put in the right address, right? But that's sort of the consequence, right? That's you can make it akin to other things that it's a lot of power and a lot of things can go wrong, but I think it's just any sort of progress. I think we're progressing and we're figuring out these little kinks and how to fix them. And I think being an oracle is a very, very important part of that, because we're solving these issues and how to use them. So yeah, I get it that the centralized exchanges are more secure, but then you got to think of other things like keys, right? They hold your keys. That's not really, you're not holding that.
Exactly.
They can get hacked. So there's all kinds of other problems. So yeah, I like DEXs. I think they revolutionized, particularly Uniswap in the way that the liquidity pools worked. Set of the order book, it's amazing. So yeah.
I think Miguel I absolutely agree with Miguel. We all got into this because of our belief in decentralization and kind of autonomy over your own assets, right? All these things.
Right.
And then living on the code. And I think what people do is people lose sight of just how new all of this is.
Exactly.
It's at the stage where it's so early. Yes, there are mistakes that can be made. That there are things you have to be careful of. There are scammers out there pretending to be some other tokens at vulnerable times, like when a project IDOs this. Yeah, that happens, right? That is, and I'm not saying that those are all okay and those are things that we should live with and suck it up. I hope we address that in the future, right?
Definitely.
But it's so early. We're just we're still crawling. It's just that we've gotten a lot of attention, but it's still a very early stage for DeFi, for DEXs. and relative to centralized exchange. If you think about a centralized exchange, they've been around forever. Outside of the context of crypto, they've been around for an eternity. So
Yeah.
I like where we're heading. I think we're going to solve a lot of these things over time. It doesn't mean that these aren't problems, but it's problems that I think as a community we're gonna address these. We're early. Give us all a little bit of time to mature.
Definitely. And I guess this is a larger question on how were the first laws made? Like when, let's say that the first guy who got murdered, maybe enough people got together and said, okay, murder is wrong, we're going to penalize that. Of course, it would be nice if there was a God. I hope there is. I don't know. But okay, I don't hope there is. Let me be honest. So let's say that if there was a God who gave out all of those commandments, could be like, okay, thou shalt not murder thy neighbor or whoever. It would obviously be great if we could have that in blockchain, but we don't. And we are developing laws, ethics, and rules as we go forward. It was very heartening to see when the Ethereum and the Ethereum Classic split happened, right? We all were there and we all took that moral decision that we would take that back. So yes, we have morals, ethics are there, and so on and so forth. Let's move gears a bit. I'm sorry, go ahead.
Yeah, I was just kind of on your analogy, I think it's akin to having free will, right? Like we as humans have free will. So even we had those commandments, we could have the same guidelines, right, in blockchain, but it doesn't mean that we have to follow them. So I think I prefer having free will, and I think it's the same in the code. You can have the freedom to use the best guidelines, use a proper oracle or not, and get hacked. Yeah.
Got it. Speaking of oracles, how do you guys envision a world of the future where oracles can prevent these attacks from happening and then some? Break down oracles for us. We understand oracles just from what we saw in that movie called 300, or maybe for those of us who read our history. How do you explain oracles?
So I'll kind of take the higher level, and Miguel maybe can go dig a little deeper. But at a high level, basically, what Oracle does is take data that's off chain and bring it and make it available for blockchain applications to use that data, which they can't access otherwise, but bring it on chain in a secure way to make sure that they're free of manipulation. They're not manipulated in such a way that they can be used to create exploits and attacks, right? So in the sense of crypto, what we're doing is with crypto pricing, we're taking the price of right now, 1,200 different assets from multiple sources. We analyze that data and to come up with the definition of the current market price and send that to the users of our data. Another example would be something like this, the score of a football match or a basketball game, right? We want to take the data that's available in the API world or in the centralized world and make that data available for blockchain applications, for prediction markets, as an example. How do we make sure that during that process the data is not manipulated? And we do that through, our consensus system. We in addition to that, where Umbrella is a little bit different, is that Miguel and I, as we mentioned, we got into this obviously like everybody else. We believe in decentralization, right? We believe the more people that are running our software, running the applications on multiple nodes, and the more they reflect the community and not kind of insiders, the more secure it is. And therefore, we put the operations into the hands of our community validators so that they are, running the code, and we provide an incentive mechanism for them to do that during our consensus process. And so that's how we ensure that security. And that's kind of what we do as an Oracle.
Miguel, I'd like to switch questions a little bit for you. Let's take the case of Harvest Finance that you explained to us. How does an Oracle prevent that attack from happening, or maybe something like that?
Yeah. So that one, it's pretty straightforward. It's something that we support now. And just it's basically Harvest Finance shouldn't have been using a single DEX as their Oracle. And the solution there is just to swap out literally like one piece of code and to use a proper Oracle, right? So like here in Umbrella, what we do is we provide the developer choices. So we can give you the spot price or time-weighted price, the mean, median, average, and then you whatever you need to use. And then we take those from multiple sources. So, we can use centralized exchanges, right? Coinbase, Crypto Compare, whatever. And then we take various sources and to make sure that there's no manipulation. So let's say we're reading from Uniswap, right? And somebody manipulated the price of an asset in Uniswap, then we have other sources of information and we're gonna detect the outlier and essentially just ignore that, ignore the outlier. And so as let's say Harvest Finance, all you have to do is use a good Oracle that uses multiple sources to source their data.
Yeah. So in the example of the Harvest, they attacked the price of USDT on Curve, right?
Wow.
And Harvest was referencing the price of USDT on Curve. That was the only source that they were 100% dependent on the price feed from Curve for the price of USDT. Whereas if they were to rely on Umbrella, Curve may have been one of the sources, but we have multiple other sources that look at the price of USDT. Right? And so if we're looking at, let's say, 5 different sources for the price of USDT, there's an outlier on Curve, we would ignore that price, right? And then rely on the other 4 that are more consistent. In some other cases, in the case of some other oracles, they're taking the median or they're taking the mean. But either way, like an oracle is either diluting or eliminating the impact of manipulation of a single source like Curve.
So 2 questions here, Sam. One, how does that address the Oracle problem? And 2, why is not everybody using oracles like right now? Like, what was the point of using Curve? Like, it sounds funny now. Maybe they thought, okay, it's decentralized. What can happen? We have our smart contracts audited. And like, I don't know. Tell me about it.
I think there are 2 things. One is, well, first, these were early days of DeFi, and I don't think everybody was aware of these vulnerabilities. But now we are, right? And so why aren't every project using an oracle? And that's a really good and legitimate question. And first, a lot of oracles, getting data on chain is very expensive, right? From the original existing oracles. If you look at, because what they're basically doing is taking one piece of data and writing that on the blockchain as a single transaction. And as gas and the price of crypto assets have gone up, like that transaction became very expensive.
$300.
Yeah. I mean, not to go into specific, but we've seen it go as high as $200-300 for a single transaction to get, let's say, the price of ETH USD on chain, right?
Wow.
I mean, that's incredibly expensive. And so what are you going to do? You're going to figure out ways to limit how often you update that price.
Naturally.
And then number 2, you're not going to support as many assets as you should. Right?
Naturally.
So, hence, you're going to support 100, maybe 200. Maybe you're going to update the price of stable coins only once a day, or if there's some weird price fluctuations, maybe then. But you're not going to update it regularly. And so projects, you first have to ask, is the token price that I need, is it supported by an oracle? And many times they don't, and so they look for alternatives, which often tend to be a DEX or something like that, and which leaves them vulnerable. Number 2 is, if it is supported, is the price updated frequently enough? And so if I have a lending platform or some other form that needs to check the price of the asset regularly, it doesn't help me if the price is only updated once a day.
Exactly.
Even once every hour, right? Like it may need it more frequently.
Right.
And so, that's sort of why projects today may not be using an oracle. And we hope to solve that. Like that is what we're solving, right? you need a price, tell us. We'll support it. There's no incremental cost for us to supporting additional crypto assets. Number two, we're updating with high level of frequency. Every 1 to 3 minutes of all of the price feeds, right? Not just the ones that we deem worthy of being updated frequently, but really all of them. And so we're excited to put this into the hands of developers and really eliminate the excuse that anybody have for not using an Oracle, because we'll support it. We'll support any crypto asset that you want and need. And number two, we'll update it frequently so that you have live data to run your project. So yeah, that's my take on it.
Interesting. Let's take a step back in time and let's think about the order books, right? Every large cryptocurrency exchange still mostly goes by the order book. Is there a use case for oracles with the order books? Or more aptly, or more bluntly, as I would ask, is there a world where the Binances of the world or the Coinbases of the world get oracles, or their order book is good enough?
That's an interesting question. I mean, a centralized exchange that's using an order book, you could potentially see them using it in some of the if they're pricing alternative assets. But I think in terms of the trading of spot trading of crypto assets, I don't know that an Oracle would play a role in there. But we'd be happy to take their price feeds. Right? It'd be a great source of data for us. But in terms of other areas that they do businesses, things like options and futures, there could definitely be a role for an Oracle in there.
Right. Because correct me if I am wrong, Miguel, order books are also closed systems, right? Whatever is the price of Bitcoin on Binance is dependent on what is the supply and demand of Bitcoin on their order book. And the same can be said about Coinbase. So are these not closed systems? Can they not have some sort of an attack that we don't have a name for? A clash attack because of the C? I don't know.
But they're also, the volume, if you put that an order book, right, in a decentralized smart contract, volume becomes a problem. And liquidity and all of that, right, especially for smaller pairs. So, I don't know if the order book model would work. So I don't know if, you can build an exchange on the order book model and then advertise it. If you're a centralized exchange, you're using an order book, and I don't think it's not vulnerable, right, to a flash loan attack. A, because it's not decentralized, it's not connected to any smart contracts, and B, it's you set your ask price, so you're paying what your what the ask price is. So
why I ask this comes from this fact that when you think about order books, you automatically think about two things when it comes to crypto. One, wash trading, and two, liquidity management, or as they call market making. Once you factor all of those let's say, I wouldn't use the word legitimate, but something that isn't exactly reflective of the demand of a particular cryptocurrency. How does that work?
Yeah, Utsav, I understand what you're saying about the kind of the wash trading, and that is, let's face it, it's very common in our industry, right?
Right.
I've looked at tokens with just unbelievable trading volumes on exchanges that, you and I probably have never heard of.
Yeah.
And that nobody we know has ever used, right? Is that a problem? Yeah, and there are probably lots of false orders in there, right? But if you look at the depth, one of the more interesting that could happen is looking at the depth of these markets and using that as a variable in the Oracle feed. And so that may be interesting.
Because where I'm going with this is this. I believe that the centralized exchanges are resistant to oracles. And I fear that somewhere down the line, we'll see massive attacks on of these on all of these like centralized exchanges like Binance, and we wouldn't be like none the wiser. And we would again be thinking, okay, should have used an Oracle. But anyways, I guess, I'm sorry, go ahead, Miguel.
No, I'm just thinking like, I think it's going to be interesting in some of the future attacks that you could potentially do with a flash loan, right? Like right now we're just talking about arbitrage and other stuff, but
right.
I mean, I'm just kind of going out there, but like, let's say you're a proof of stake system, maybe you're Ethereum, right? And let's say I can borrow a crap load of Ethereum and set it at stake and then submit a bad block, right? Or something. Or maybe there's other systems that have on-chain proof of stake, right? You just take out a bunch, set it at stake, submit a bad block, and then remove it, right? And pay it. I don't know, so these are just things that are going to be interesting. I think like future exploits are going to be interesting.
Right. Like now you're talking my language. Yes, what's the next attack that you are going to pull off, Miguel? Let's hear about it.
Nah, I think that was it. That's my idea. Yeah, I mean, others, I'll just keep them to myself for now.
Gotcha. So yeah, with that, let's call it a wrap. It was very wonderful having both of you with us. Thank you for joining the HackerNoon podcast, Sam and Miguel. And now we'd like to give each of you a few minutes to speak directly to the HackerNoon community.
Yeah, well, Utsav, first off, thanks for having both Miguel and myself here. It's been an exciting ride since we started Umbrella back in September of last year. And, we have obviously since then conducted our IDO. We've developed our product into testnet both on Ethereum and Binance Smart Chain. And I'm really excited to announce that we're going to be on mainnet next week. We'll be first starting with Binance Smart Chain. And so, to the community out there that's developing product, talk to us. Like we'd love to help you guys secure your projects to make sure that you're not vulnerable or susceptible to these types of attacks and all the other ones out there. And work with us early, right? Like I think one of the things that we're seeing is that a lot of projects are tackling their Oracle-ish challenge at the end and for finding it very difficult. But what they should be doing is designing with an Oracle like us in mind from the beginning to make it stronger and come see what we can help you do. Like all the things that we've learned with other projects that we work with the community at large. And we look forward to engaging with you guys. I think we have a great, roadmap ahead from expanding into Ethereum into, other chains such as Polygon and Solana coming up. And we're really excited for the future, not just for us, but for the crypto community at large. I think we've really started the ball rolling, and this is going to be an unstoppable force. And I can't wait to see what we do together. So give us a call, hit us up, and we'd love to work with you guys.
Definitely. Thank you. Miguel, do you have any parting words for us?
Yeah, for sure. Yeah, first of all, thanks Utsav and for having me, and thanks SK. I definitely agree. And it was a fun chat. I'm really excited about Umbrella. I really believe, like, as a technical advisor, that we're just better. Like, we're ahead, and we're real, right? Like, you can see our product, you can go and use it. We're about to be on mainnet, and that's huge. Like, we see some of these projects that are just never even got to the real stage. We have other oracles that have been around for a while, right? And if you've heard of like OCR, like off-chain reporting, I think that's cute, but like we're like miles ahead from that. So I'm really excited about Umbrella, and hopefully we can continue to execute and drive that community and become more decentralized. And I definitely want to encourage developers that are watching. We have our SDK that's open and live. You can use the later different types of data. You can see all the data points. You can request data from us directly, so that we add your data point that you want into the system. Especially now that it's kind of like a smaller community, you have a much higher likelihood of getting your data point quickly in there. I just want to encourage developers to check out the SDK, to start developing apps and just really kind of test drive the product.
Got it. Thank you very much. And we'll be leaving a lot of links with the umbrella like staking portals and the developer documents in the link to this episode. And there's this developer challenge that is happening with the Umbrella Network, where if you could develop an app on their BSC mainnet or the testnet, like you could win a lot of money. We would leave links for all of that in the description below. And with that, let's call it a wrap. Thank you guys, everyone, for joining the HackerNoon Podcast.